Okay, I think that was also the year when Mr. Jaitley presented his last budget, right? Because I mean, there was two budgets. One was the before the elections,
Yeah.
the interim budget, and then there was the full budget, which had happened. Okay, our alpha manager of the day is Ajay Vora, head of listed equity alternatives at Nuvama Asset Management. Ajay, great to have you with us here. Thank you very much. Sorry to have kept you waiting. Just a quick sense, Ajay, if you will, on is there a specific bother for the market, or this is just a bit of a listless, sideways kind of move we're seeing, and really no big dominating drivers or reasons for it. So just wanted to get a sense of what you're picking up.
Good afternoon, Prashant, and thanks for having me. Honestly, I feel that there are two big trends which are underway and maybe outweighing the strong result season so far for us. First being, if you look at the relative attractiveness of other emerging markets, and especially China and few other markets. Over last 3 months, MSCI EM is up almost 20%, whereas MSCI India is almost flat. So you can just gauge from that the FI money where we have been seeing continuous selling is moving to other markets within emerging market. And second part is, at the asset allocation level itself, if you look at it, there is a big trend where, if you look at the debt as an asset class, after a fairly long time, is actually offering you fixed income. So broadly, if you look at it, especially during a period where the earnings growth is expected to be muted, and there is a potential to make capital gain as well on the debt asset class, maybe some money is moving towards that as well. So I think these two trends globally is outweighing our strong results, especially from the banking sector. But the good part for us is that now it has been almost 15, 16 months where we have been in this range of 17 and a half, 18,000. So October 21 was when we hit the peak of around 18,500, and we are still at 18,000. So we have spent almost 15 months, whereas the earnings have rolled forward by 12 to 15%. So in a way, the valuations are now looking pretty reasonable versus where we were maybe 2 quarters back.
Ajay, how much more of a catch-up do you think the other emerging markets have to play? You indicated that since the start of the year, MSCI emerging markets have outperformed India by nearly 20%. How much more do we have to go before that levels out and India can start seeing interest?
Sure. So sorry, I mentioned that over last 3 months, not the start of
3 months, okay.
Yeah, over last 3 months. So my sense is that, if you look at now where we stand in terms of earnings, we are looking at closer to 920, 930 rupees for FY24 for Nifty, and maybe 1030, 1040 for FY25. And considering, the very strong numbers from the banking sector in this result season, I don't see any major earnings downgrade at an aggregate level. So I think that a year from now, we should be looking at closer to 20,000 odd levels for Nifty, which is again, around 12, 13% upside from here. And broadly, if you look at it, we bottom out somewhere close to 17 times. So with very limited downside, just because we have spent enough time in this range and over last 1.5 year, maybe a quarter more of consolidation, but then we should start picking up. So both things will, catch up. One is, our outperformance in a way we have given up versus other emerging markets, and our valuations have also become pretty reasonable.
By the way, that's heartening news on the green bond front, on the whole effort to go towards sustainability. This is only part of the auction. The government, I believe, is looking to sell bonds worth almost 16,000 crores over several tranches. Today was one. 4,000 crores. This is 10-year green bonds. And the important aspect is that the yield seems to be slightly lower than the 10-year yield. So that's good news. People are lapping up these bonds. And obviously, these are issued by the Government of India. RBI is issuing them on behalf of the Government of India to finance projects on the sustainable side, solar, etc. So that's good news coming in from the bond markets. Well, Ajay, good afternoon. Surabhi here. So, just to talk about this, the whole aspect of the budget is, of course, spurring the economy, capital expenditure, and that's going to be the talk. Now, how that happens, when that happens, we'll get the math on the first. But in terms of stocks, how are you playing this theme if you are? If you're convinced, if you're playing it, then through what category of stocks?
So, Survi, if you look at the entire composition of the budget, with every year passing by, the only relevant thing where most of the, I would say, investor community focuses is on the capital expenditure side. And if you look at the entire numbers, how it shapes up, out of a total expenditure which is expected to be say somewhere around 43, 44 trillion rupees, where government can actually play around with is close to 8 to 9 trillion rupees. So it's a little less than 20%. And within that, the focus area has always been roads, railways, defense. These are the three big heads where, large part of the capital expenditure takes place. So that is where we need to see where actually the large jump or growth will come into play. And the second part is, I just hope that, we don't see any negative surprises on the taxation front, which is always the worry pre-budget. But if there is some sort of relief in terms of the taxation slab for individuals, maybe that can spur some sort of demand on the consumer discretionary side, which has been somehow lagging post the festive season, and especially it's a bit weaker on the rural side. So my sense is that consumption and investment, these are the two big heads. Investment, as we discussed, it's almost 8-9 trillion rupees is something where we would focus on.
All right. Hi, Ajay. Good afternoon. Nigel on this side. Ajay, it was heartening to hear that you still believe that the index, the Nifty, will go up to around that 20,000 odd mark, 12%, 13% return that you were mentioning. But let's leave the Nifty at the side, because a lot of retail portfolios, they are not feeling like the Nifty is at around 18,000. It's more like 16,000. What about the mid and the small caps? They had a period of underperformance, but now it appears some of these high quality, richly valued stocks, they're already trading at premium valuations. Is it time now to shift gears and the broader market start outperforming?
So there are two parts to this. Let me first address the small and mid cap side of the market. Actually, if you look at it, historically, this space has tend to underperform when the interest rates are rising, and especially during high commodity prices period. But now, if you look at it, the underperformance is pretty significant in the small and mid cap. And considering the commodity prices have also eased and interest rates have broadly peaked out, my sense is that investors are waiting for this clarity on the long-term capital, short-term capital gain tax in the budget. If there is no negative news on that front, I think the names where the earnings are fully looking on a very growth side, and the valuations are also reasonable, they should pick up post the budget. And coming back to the high P names, honestly, I feel that the growth rates have come off pretty sharply in most of the names, and therefore, I think that there can be either a period of time correction or a decent price correction. But making a case for an upside for the high P names, in spite of business being great, but the growth, what the equity investors look for, has come down pretty much sharply. So my sense is that small and mid cap post budget, ideally, if there is no negative news, should play a catch up.
All right, Ajay, it's a pleasure. Thank you very much for joining us, and hope to speak with you again soon. 237 points. By the way, the Nifty is back at the day's low, almost at the day's low. The low was 17,846 earlier. We are at 17,882. So just about 30-40 points away. And I think a lot of the Adani stocks are also, I don't know if they're at the day's low, but along with the market, they've also come off. I mean, ports and, green, transmission, Total, and a bunch of others should come up on your screen as well. They'd all kind of staged a bit of a recovery. There's some selling pressure, which is emerging again, along with the market, of course. We'll take a break. As always, we'll get you a quick check on what's happening in dealing rooms in our segment, D Street Chatter. And of course, we are going to be joined by our technical experts again. We'll tell you what to buy or sell today for a reverse trade tomorrow. Stay with us.